Hey guys, thanks for watching. We're bringing the offense now finally after um, months and months of defense. And the reason why I taught defense first is because it's so important to maintain that respect of the market and having it come to you and showing you structure and showing you participation before you get into it. And it makes up a lot of your structure when you're trading, and a lot of your um, win rate will come off that defense. So what we found out with offense is um, we moved into the offense and the same way we build the defense through measurable alignment. And it's not prediction, not emotion, not headlines. It's alignment, basically. Again, this is the PBSS activation mode, basically. And today we're bringing you how it ticks. This is not guessing strategy. Of course, you guys know it's not hype. This is the STPW, the Scalping Tactical Participation Window. And today we're going to show you exactly how the 15, the 5, and the 1 minute together with raw platform data, to enter trades early and exit before structure breaks. So, and I'm going to explain, what each layer is measuring, and so you don't know, so you know what it means and you know what it doesn't mean. So, the problem with most scalpers is they look at 1 minute time frame only. They react to the candle. They react and they chase a breakout. And a lot of times, it's the 1 minute is just basically it's not context, it's timing, really. If you treat timing like context, you'll get chopped every time. And that's just relying on one candle or, not really seeing what's behind it. And that's what the 15, the 5, and the 1 are for. We don't react, we diagnose. The multiple time frame stacks, of course, the 15 minutes the environment, 5 minutes participation, and the 1 minute, of course, is your precision entry. As you can see, I have the three of them up here. We have the 15 minute, the 5 minute, and the 1 minute. And it gives me accurate analysis when I'm in a trade, whether it's going to sustain or not, or whether we have participation in that trade. So the 15 minute we ask is structure advancing or stalling. Is it higher highs continuing or lower lows continuing? Are the EMAs stacked with angle? Are the ATRs expanding or compressing? Where is price relative to the block, the VWAP? Is volume confirming pushes? So the 15-minute doesn't give you an entry, it gives you directional integrity. Directional integrity means if a trend is intact, pullbacks are information, basically. You're going to see how valuable information that is. If the trend is breaking, pullbacks are warnings. They can also be just stop hunting too as well, and you'll see stop hunting, a lot more during the day than we will right now. So if integrity is absent, offense is reckless. It really is. So the 5 minute participation is, we ask is participation building? Is the EMA and the EMA 50 alignment? CCI continuation or weakening? Are we like minus 220 or positive 198? Both of which are good continuation numbers. Of course, we look at the 5 minute and the ATR expansions and basically the volume behavior and the VWAP acceptance. Participation building is volatility expansion plus directional follow through. And that's when you get to start finding some trends that actually are able to sustain. Participation fading means shrinking bodies, of course, shrinking ATRs, and fading volume. And you'll see that in the candles as we go up. You can see an example right here as we're going downward. You can see kind of where we're just losing our candles here. This one's actually kind of big here, but 15 minutes shows kind of a slight downward trend. 5 minute confers whether structure is backing, and that's really important. So I created this 6-line system, which is really cool and it works out really well, and it runs consistently through the API. I also upgraded my subscription, so I now have API status on my account, and it really is way more informative than any other API I've ever experienced. This just tells you what's happening with the indicators, and it teaches you, which is so fantastic. I can look at a market now using these 16 indicators and actually read it like a sentence without having the system. After the almost 8 months of learning this system and developing it. So the 6-line system, when the 6 lines, 6 align, probability improves a lot. You're in your 70 to 85% range. You got line 1, price and structure. Line 2 is the EMA control. the 21, and line 3 is the EMA 50 backing. And then you got line 4, which is the CCI continuation strength. Line 5 is the 5-minute ATR expansion. Line 6 is the 15-minute ATR expansion. If both expanded, movement has room. It has room to move. If both compress, you'll often be in a drift. And a drift is something you don't want to be in unless it's really kind of a slope trend. So if one expands and the other, compresses, you may have momentum without structural support or structure without, execution space. This distinction matters. So volume committed, volume measures commitment, basically, and volume rising during expansion suggests participation is real. And when we get into institutional money and you really see how institutional money can work and just move the market, you'll see when they move it, a lot of times retail will move it if the market is moving and if there is room for it to move with the economy the way it is. So sudden volume spikes near structural levels often signal liquidity being accessed. Volume does not predict direction now, remember. It confirms conviction. So now a little bit about institutional value. The VWAP. The VWAP represents the session's average transaction value weighed by volume. So intuitions monitor it because, it represents fair value for the day of trading. That's really kind of important. If the price holds above the VWAP and continues to be accepted above it, buyers are willing to transact and above fair value. That means they're in control. So you'll see the VWAP up above, just like this, which is usually the buyers in control. As you can see, it's switching. And before we had a really good Z pattern here. It's a little ways back. It's hard to see. Right here we had a Z pattern. Right here we have one. It came up, and you can see once that VWAP starts angling, it's a good indication that you have some institutional money coming possibly. And the gaps in the candle will show you that too as well. We'll have another lesson on that. If price stays below the VWAP and continues to accept below it, sellers are in control. So once again, sometimes you'll see that VWAP go right through price. And whether it's above it or below it does make a difference. So you've got bearish control or bullish control. So basically, we repeated tests of the VWAP with failure to, hold off in signals and contested environments. So contested environments often become range bound. So we want to kind of stay away from that. Unless you're working the range and you've got a good range of 15 to 26, maybe up and down. So candle structure in the market mechanics. We are going to use candles. Of course, we're going to use candles. Without them, it's hard to tell what things are doing. I suggest I use the hinky. I can't remember what they're called. They are called the Hinkin Ashi candles, and those seem to work the best for me. They seem to give me the best reading, especially when I span them out like this and crunch the 1 minute a little bit. I get a good idea of where the trend's at and where we're going with their ATRs and everything. So candle structure and market mechanics. Candles, are compressed behavior, as we all know. The body shows, who controlled the interval. The wicks show where liquidity was taken and rejected. That's where we start stop hunting, and you'll see. We'll talk a little bit more about that stop hunting and kind of show you within a trade on how they'll just pull back on those late entries and just snap them. The wick shows where liquidity was taken and rejected. So long lower wick in bullish context often means stop below prior lows were triggered. So it's just pulling back on the late entries is what it's doing. Those stops convert into market sell orders, and larger buyers absorb that liquidity. It's kind of cold-blooded how they actually do it. Then price reverses. This is a liquidity sweep. Long upper wick after breakout often means that, of course, we got late buyers entered, and their stops sit below the breakout, and price fails to continue, and stops get triggered. Once again, that's a liquidity is harvest, basically. So it's chops the people that have those late entries out, plus just your basic pullback. So markets move towards liquidity because liquidity is fuel. So stock clusters are visible pools of fuel, and that's where you're going to see, a couple large candles coming in, and then bam, you'll see it's maybe a doji coming in there. That's just somebody slapping a sell order on there and eating up your you're eating up your money basically with your late entries and what have you. So stop clusters are visual pools of fuel, and compression builds that fuel. So when you have compression and you see multiple rejection wicks, like if you're in an institutional bond market where it's just really going slow, and you get 2 or 3 or 4 upper rejection candles, of course I'm going to sit in that compression and I'm going to go ahead and go bearish on it. And a lot of times you'll see that with those rejections formed, it does usually tick that way. Probabilities in the system will let you know, um, of course, what's happening with that. So compression builds fuel, and that's where the compresses, and you get that kind of breakout from there. Expansions consumes it. So we'll talk a little bit about hammer pins. So the hammer at support near VWAP inside an alignment shows potential defense, means we're turning around. And those usually come at the top of a trend. They're just that small stick and then the small little stick on top. It's just basically a cross or an upside down cross. A doji inside compression shows indecision, and sometimes dojis you'll see will form inside a trend, and that sometimes is the ticket to say that, hey, we've still got support. They're just stealing some liquidity here is basically what they're doing. And you'll see that happen quite a bit. As you can see, there was a trend that had a really nice doji in it, a really good one. Like say right here, this is kind of just a stop to get people who got in maybe here, bank, out, 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 out. And that's basically what they do. And then it continues on. A lot of times you'll see the ATR still pointing down, the 5-minute pointing down. And if the 1 minute's in line, you have all three of them in line, which we're coming close to right now. We have the 1 minute and the 5-minute in line, and we're just waiting for that to go on. We'll have 3 alignment. We'll check the EMA and check the CCI and see where it's at and see what we can do. So morning stars and evening stars formations, show transition of control, but only if structure and volume confirms it. The shift you want to look at support and resistance. You want to look at the range you're in. Most definitely, there's a lot of variables to that, but it is one of the better setups to look for reversal, as well as dojis are very, very good reversal candles, especially at the top when you see volume just fading away, or you see the sellers fading away. And bam, you get that doji, and boom, there's your bullish. So we do not trade shapes, though. We trade acceptance and structure confirmation, which I talked about with the 15 to 5 and the 1. And it does bring your probabilities of success on the trade up immensely, especially on a scalp. So we trade acceptance and structure confirmation. So did price close with control? And did the next candle confirm? Did the next candle, you got a nice bullish and another bullish? Did structure break? Did volume confirm? Or did the VWAP shift? Those are all important things to watch for when you're looking for a reversal. And if they all line up, usually you're going to play the top and you're going to play the bottom. So we'll talk a little bit more about the STPW, the scalping tactical participation window. Compression, we got liquidity sweep, acceptance, alignment across timeframes, and ATR expansion, volume confirmation, and VWAP positioning. When those 6 align, your scalp, I tell you, I have a really good success rate when all 6 of these align. It's definitely up in the 80s. Then the participation window opens, of course, because structure authorizes it, and you've got participation in the market, and you just have better probabilities of that market staying bullish or bearish. Now, every setup doesn't hit. That the market can change at any point in time, especially on a low volume environment. And you need to know when you're in those. Those are really important. Now we need to talk about something that doesn't get explained enough. The early game. This is a system that I designed to watch the trends of the 15 to 5 and watch every single little thing it can with the indicators to see that this pullback is not strong enough to defeat structure. You'll see that in the 15, you'll see that in the 5. You might see the 1 dip a little bit with a little red candle as you're going bullish, but then the 5 and the 15 say we still have structure, and that is your ticket to, hey, wait a minute, this still has structure. So a strong structure. You stay in through that pullback. It's just a liquidity sweep. That's all it is. And the system is very, very good at citing that. So even sometimes you see some bigger pullbacks, it is still just a sweep. That's all it is, and you stay in, and that's where your profits really begin to build. So most traders enter correctly and exit incorrectly, and that is such a big thing because I used to do it all the time until I had this system. They exit because of a pullback. They exit because of a single aggressive candle, and that's not always true. They exit because fear overrides structure, and to pay attention to that structure is fantastic. And to have good quality advice to stay in has gotten me into $1,600, $2,000 trades, just really nice trades. I started this account with 400 and I built it to 2980, and that's been over a 2-week period. So early gate separates the noise pullbacks, and from real participation failure. So when early gate is measuring, early gate measures the market condition, not direction. It asks, is this environment still capable of supporting participation? And it evaluates basically ATR behavior, candle compression and expansion, volume consistency, and of course the VWAP behavior and structural clarity across time frames. It's really important when you get that structural integrity across time frames. It really does help, and you can see the trade developing, going, okay, I can stay in this. When early gate remains clear, volatility has not collapsed, liquidity is still present, and the market, is not in a drift. It's in a trend, and you're nice and healthy in it. It'll tell you along the way if you run the V2 model that I just made for offense, and it really does give you a great sense of what's going on. I'll do a screenshot at the end of this, kind of show you what it looks like. So volatility has not collapsed, liquidity is still present, and the market is not in a drift. Once again, trends do not end on pullbacks. They end when participation disappears. And that's really important because that allows you to stay in through those pullbacks and kind of really give you a good, better threshold for staying in a trade. Pullbacks happen. Wicks increase temporarily, bodies, may shrink briefly, and ATRs may pause, not collapse. This is reset behavior. And early gate helps us distinguish, reset behavior from transitional behavior. And if early gate says clear during a pullback, that pullback is often informational and not a reason to exit. And it has helped me so much. I'll tell you guys so much. This is how directional access works. The 15-minute, structure remains intact. The 5-minute, participation remains readable, and the early gate remains clear. Then the 1-minute pullbacks, are timing and adjustments basically, or liquidity sweeps. We're not guessing the direction. We are verifying, the environment, still supports that direction. So there's a lot of variables in it, and this system is so good for identifying it. So when early gate flips, the early gate does flip, and when it does, you want to listen. Basically, get out, because that means structure is broken, and most likely you're going to see 2 solid red candles, chopping away at your profit, and you're going to get out anyways because you're going to know that structure has changed. So when it flips, ATRs compress across time frames, volume collapses, candles lose structural clarity, and VWAP becomes a gravity center, starts moving towards the middle. Price oscillates without progress, and that's when you want to get out. So when that happens, staying in becomes hope, and hope is not the strategy. So really, early gate tells us when the participation window is no longer structurally justified. So it's a really good tool to have on here. Staying in versus getting out. You stay in when structure remains intact, and you reconsider when acceptance weakens, of course. You exit when the structure breaks with confirmation. Pullbacks inside intact structure are not reversals, and that's a big one. Breaks of structure with volume expansion are transitions. So you really got to watch that volume. If volume really starts picking up, you know that could be a transitional period. Start seeing the candle structure too as well. And then we learned today regime awareness. There are 3 regimes. We got expansion, compression, and then we got drift. So expansion supports offense. It really does. When you see that expansion going and you got everything aligned, love to just hit that buy button or sell button. Compression prepares offense. Drift destroys offense. And drift is when it starts drifting in smaller candles. And that's when you decide whether that regime is flattened or not, or if they're just taking a rest. Early gate kind of protects us from drift. Structure guides us in expansion. So micro context, we're going to talk a little about micro context, about the news a little bit, indices, yields, oil, and gold, on how they're going to hedge with all this uncertainty going on and stuff like that. And I got into 2 trades today right when gold opened up, and it was really nice because I knew it was going to be bullish because of the fact that people need a safe haven right now. And you can see that they're very hesitant to get in participation mode right now. So indices respond to interest rates and expectations and liquidity flows. When treasury yields rise sharply, growth assets often compress. Okay. When yields fall, liquidity may rotate back into risk assets. But price only sustains when the participation confirms that the microchips is on. Oil responds to supply expectations, transportation risks, and of course production constraints. If supply tightens, volatility can expand. So, in other words, if those Strait Hormuz in Iran gets blocked, and we've got disruption in Middle Eastern oil, that could cause it to go up even more. It's 66 a barrel right now, and it could go higher. That's for sure. I'm predicting about 68 to $69, possibly even 70 if that first month hits. God forbid. God forbid. So, good thing to watch is the headlines. Headlines will give you a lot of good news. Tariffs on, of course. It means we're going to flatten out and lose some little ground. Tariffs off means, hey, we're going to go bullish. So, keep an eye on that too as well. There's a lot of macro headlines that you can watch that you need to apply to the market too as well for intraday trading and things of that nature, because once you get down what the macro content really means for the market, that's when you can sit and trade. You can get in around 9 o'clock and check on it around noon, and you can see that drift happening. That happened to me on Friday. It was a $976 trade, of course. I knew that gold was going to be bullish. The structure was there. Um, the trend in the price action was right on point, and sure enough, it rose like $2, and it was a really nice, really nice. Actually, it was a little bit more than that, but it was a really nice trade. But headlines alone, are not trends. Participation confirms them, of course. You want action, really actionable headlines. So gold reacts to, real yield dollar strength and inflation expectations and uncertainty. So we just got the worst reports out this Friday. And indices like, say, for instance, the Russell, the S&P, and the NASDAQ, you're probably going to see a little bit of bearish activity. The gold and silver, maybe platinum, lithium, AI goods and stuff like that, and actually safe havens, you're going to see gradually go up over the next week or so if this persists. And it's just a good thing to know that we could have a good bullish side on gold, which could be very profitable for us. We just trade CFD, and CFD is the beauty of it. We don't hold indices, we make money off the movement. So when real yields rise aggressively, gold can stall. And that's what's going to happen. The dollar's going to strengthen, and we're probably going to see a halt in gold, maybe a little bit. Maybe we'll see some hedging. When real yields are okay. But again, structure and volume must, confirm capital rotation. So let's keep an eye on that, plus headlines too. We do not trade the headlines. We trade, of course, structure within the market, and of course, the headlines adapted to the structure. We trade the reaction, basically. We trade reaction to the market. So, live bridge, I figured out with my new service, the upgrade, I can go ahead and get live information. I haven't set it up yet. I'm going to test it um, this evening, possibly, and I can line the phone up to the plus 500 screen and basically get live market updates through my phone. And what I will do is I will go ahead and privately we can meet up somewhere possibly, and you can let me know in the comments. I've got that PBSS Outlook website, and you can meet up there. But it can be very, very beneficial. The success rate is just crazy, but you'll see. Once again, you'll see the link below on the video where you can get in contact with me. So, leverage, if conditions, when conditions align, this thing will give us a very, very good outlook of what the market's going to do. Because forcing execution and compression damages discipline, and we don't want to do that. We want to know what the structure says, and I can't wait to test that out. Structure determines action, of course. And then, in closing, guys, this is how we bring the offense without abandoning defense. And of course, the 15-minute structure, the 5-minute participation. We've got the 1-minute precision, 6-line alignment, the volume commit, BWAP positioning, candle mechanics, early gate protection, directional access, regime awareness, and micro context. And I always run a micro report before I start and get it into the B2 model that I designed. And it all runs right into the B2 model and projects structure with context from macro news too as well. So no guessing, No guessing. This is just straight framework. Next time I come on, we're going to go ahead and I'm going to use the phone system and I'm going to show you guys how we get live market analysis. I'm going to go ahead and show you guys a screenshot now of what actually happens. I'm just going to take a screenshot. I'm going to go to ChatGPT though. And I'm going to go ahead and take a screenshot for you guys. Of course, I have a timestamp running. And there's just a simple saying you have to say. Let me get into here. All right, this is, here we go. Run full stack workflow model V2. Of course, it's probably going to say we're in chop because we really don't have much going on. And here we go, analyzing image. Hope it doesn't have to think too long. Full stack workflow, model V2, V Russell, regime continuation, not scalp compression, 5 minute clearly trending down. Structure, 5 minute, 1 minute, right there. It says bearish posture, lower highs intact, no structure break visible. Strong bearish impulse leg, pullback EMA cluster. So it's saying this is just some chop right now. No bullish structure break, not yet. So it's going to say wait for confirmation basically. And our participation is probably going to be restraint. Participation moderate. So moderate means the structure's there, but right now I would wait for confirmation. Not high energy expansion, but not dead. So watch for confirmation. And then we've got our module alignment. We've got price and macro, bearish intraday structure. That's what you really want to see when you start your day as an intraday structure, which means the bullish structure is still intact. And that's how I got that trade with gold the other day on Friday. So module 2 is bearish slope alignment, CCI below midline, ATR is supportive, and continuation behavior. So it's a 4 out of 4 bearish. I would still wait for confirmation on that before I got in. Offensive verdict engine, trend not broken, no structural reclaim, no bullish control shift. It's because we don't have a big pullback in there, and that's the beauty of the early gate. It reads that this is not a solid shift from our bullish structure, bearish structure. But as you can see, this is running so flat right now, it's just compressed. So really we're in a low voltage environment, and I don't trust low voltage environments very much at all. So STPW overlay, this is not early compression, not a scalp intuition, okay, not a scalp intuition window. So right there, you're going to know that it's not a scalp continuation management phase. As long it would be defensive, short it would be, hold and monitor. Historic education report, bearish, moderate continuation, no break, 4x4, continuation, educational outcome. 5 minute trend aligns with the EMA scope and 1 minute reclaims curves. You can also program the V2 flow just to give you a grid guide of the modules and actual what's going on so it comes up faster. I'm just showing you guys kind of in this format because it's the educational format. This is how I learned how to apply the indicators and how well they taught me how to do the market and read the market. I mean, it's really easy to read a sentence. Well, guys, that's the report. I mean, I can show you a grid guide next time. Actually, next time I think we're going to go live. Once again, I'm going to say practice patience and master discipline, and you'll be blessed. And y'all have a blessed night. Once again, thank you for watching. First 100 subscribers will get the system for free, and hit me up on the PBS link or give me a shout in the comments, please. Thank you very much for sticking around if you did, and y'all have a really great night. Thank you so much for taking the time.